New IRS tax rules on Venmo. PayPal payments over $600 could overburden Americans, according to Fox Business. So let's check this out. So, a new tax reporting requirement targeting Americans who made money online through third party apps like Venmo or PayPal, also probably Cash App, could cause serious confusion for taxpayers. According to an industry group that is calling on the government to immediately delay implementing the rule, the National Association of Tax Professionals, NATP, this week urged the Treasury Department to wait and make some modifications before it implements a rule requiring taxpayers to report to the IRS. Transactions of at least $600 that are received through third party payment apps like Venmo, PayPal, and Cash App. Third party payment processors will now be required to provide both users and the IRS with Form 1099-K if they add up to more than $600 over the course of the year. Previously, the payment apps were required to send users Form 1099-K if their gross income exceeded $20,000 or they had 200 separate transactions within a calendar year. Democrats made the change in March 2021 when they passed the American Rescue Plan without any Republican votes. Now, a single transaction over $600 will trigger the form. The change is intended to crack down on Americans evading taxes by not reporting the full extent of their gross income. However, critics say that it amounts to government overreach at its worst and that it could ultimately hurt small businesses. Now, the thing is, this doesn't just hurt small businesses, this just hurt individuals as well, right? Like maybe you owe like a buddy like $700 for something, or you gotta like pay your rent and it's like $700 and you do it through these forms. Like you're going to cause a lot of issues. like, Lord. The NATP slammed the rule as overly burdensome and warned that it could create undue issues for taxpayers, as well as the already overwhelmed IRS, which is still wading its way through a backlog of unprocessed tax returns from previous years. The lowered reporting requirement will not, in our opinion, address the goal the Treasury is trying to accomplish, that being accurate reporting of taxable income transactions between parties. The group said in the news release it warned of two likely outcomes from the $600 threshold. Taxpayers either receive and ignore the form due to a lack of knowledge regarding handling these types of transactions, or taxpayers receive the form and are unsure what type of transactions they are required to report. The new rule only applies to payments received for goods and services transactions, meaning that using Venmo or PayPal to send a loved one a gift, pay your roommate rent, or reimburse a friend for dinner will be excluded. Now that is good, right? But the thing is, what is a good or service? So, also excluded is anyone who receives money from selling a personal item at a loss. For example, if you purchased a couch for $300 and sold it for $250, the amount is not taxable. The problem is, you're still going to basically end up having to go through the hassle, right? Like, people are not even factoring in, like, the hassle factor of all of this nonsense, you know? Which is a really, really big issue. Because you gotta factor in the cost of time, which many people don't pay attention to. Now, this does include things like paying your family or friends back using PayPal or Venmo for dinner, gifts, shared trips. PayPal previously said. But again, how would the IRS know, right? They would know once you end up basically having to deal with them. Let's see. So, to be clear, business owners are already required to report that income to the IRS. The new rule simply means that the IRS will figure out what business owners earned on the cash apps regardless of what that individual actually reports on their 1099K, because it broadens the scope of the threshold. But here's the thing, too, that a lot of people are not even factoring in as well. What is to stop a business or an individual from just collecting cash, right? Because you're not going to be able to trace that. So you're going to push more of these small businesses into doing everything by cash. Form 1099K is used to report goods and services payments received by a business or individual in the calendar year. But there are certain exclusions from gross income that are not subject to income tax, including amounts from selling personal items at a loss, amounts sent as reimbursements, and amounts sent as gifts. The NATP suggested that several changes be made to the new rule before it is ultimately implemented, including requesting that third-party settlement companies establish business and personal accounts in order to intentionally separate business transactions from users who use third-party settlement programs. Now, I would actually think that that would probably make the most sense because if you have like a personal account where you do everything in like your personal life, and then you got like a business cash app kind of thing, like okay, I'm going to send you money here for this product or service. I'm going to accept this money for you purchasing this service or whatever. Because for example, like I'm just going to use this as an example. Say you are a massage therapist, right? And you want to offer that as like a side hustle because maybe you're too busy taking care of like your family or whatever, right? So for the most part, maybe you're like a stay-at-home mom or stay-at-home dad, but you do massage therapy on the side, right? So instead of collecting cash, because cash could be like fake or whatever, you just do like a Cash App thing or PayPal or whatever. So now their side hustle is going to be taxable, which is going to be a hassle, right? But if you're able to have it set up to where you have this side hustle business, specifically Cash App account or whatever, and then you have your personal one, and you just basically accept all of your business expenses through this business Cash App account, cool. That makes it very simple, right? Because like, okay, I'll charge like I don't know how much a massage is. Like I don't like $30 or something per hour, maybe more depending on how good you are. But like that could just basically add up and add up and add up to where you're going to probably hit this amount, right? Or who knows, maybe you're like a chiropractor or physical therapist and you prefer to like accept this sort of cash thing instead of maybe going through insurance. So, it's just something to think about. I just don't like the idea of the IRS making it more of a hassle for people to pay their taxes. If they make it very simple, that is a completely different thing, right? Because things would be probably way more simplified if one, that there was a flat tax, two, there was no cash in circulation, three, you could only use something like a specific account linked to the federal government that, like, okay, you spent this amount of money, you accepted this amount of money, there you go. And then you got a separate account for business. Like, the problem is there's just so many different accounts, so many different private companies where people have their money stored or accept money and all that kind of stuff. And there's some people who may even have accounts that is getting money to it that they completely forgot, which is a whole nother thing too. Because you could literally have like a bank account that people are basically sending their money to, or like an old Cash App account or whatever, or PayPal account that people are like literally sending money to it, and you just completely are unaware as to what is going on. Like, I just dislike the IRS making it so much more of a hassle for people to simply do their taxes. Like, You know what we owe you. Just tell us what we owe you and leave it like that.